Everyone, welcome to Market Insight for the week of January 15th through the 19th, 2024. This is the first Market Insight of the new year, I think. And so, as usual, we'll start with our top-down approach. The monthly is at the old all-time high resistance area that was put in December of 2021 and January of 2022. Same period as the current December-January period, but just 2 years ago. And we've actually traded above that level to as high as 48.4150. And the monthly right now appears to be holding the highs thus far this month. Now, of course, we're only in the middle of the month. We've got 2 more weeks to go. So we can't say too much about the current bar, but at this point in time, it looks still bullish. So let's check the weekly chart. And as we pointed out on the monthly, we are in the area of the 2021-2022 old all-time high of 48.08 3/4. So over the holiday week, that's this narrow range bar up in here. The range severely narrowed and volume dropped way off. And we had shortening of the thrust in the price bars, right? Both approaching and trading around the 48.08 high, we get shortening of the thrust. The week before the holiday, we had sustained volume, but the range narrowed and the thrust shortened. Look at all the thrust that was put on this bar and then compare it with these next couple of bars, right? You see, obviously, the shortening of the thrust there. And then the Christmas week, also shortening of the thrust, but more importantly, no demand up in there. Wasn't therefore a surprise to see the market react the week after the first week of the new year and react down. And it did. And it did so on average volume, not strong volume, not weak volume, just average volume. Now, last week, we held a higher low and closed back up near the highs of the prior week and back up above the 48.08 level. I think we traded up to and closed around 48.16 and change, give or take. I noticed that volume picked up and the close is nice and firm. So although there's some effort, versus result here, some effort to go up, and we could have gotten better, maybe a slightly better response in price. I would still be anticipating follow through to the upside. We'll see how far up it can go, but I would anticipate that. I would expect that. Now we're getting near the top of the trend channel here, the supply line, and this goes back. I believe it goes back. It certainly goes back to March of last year, and I think probably goes back to October, if I'm not mistaken. In any event, it's a long-term weekly supply line. It's an important one, right? And this is confluence up in here too. So we want to be aware of that for the next couple of weeks for sure. Let's take a look at the daily chart. So the daily is interesting. After the narrow range days up here during the holiday week rally, we see the market react and volume picks up to the downside over the holiday week, but it wasn't especially large, kind of average, as I said before. So we're not seeing, the largest down move since the uptrend began, I don't think here. Monday, we had a spring of the lows down here, and Tuesday, that was Monday here, and a very nice response off of that spring. That's what you love to see on a spring, right? Just a great response there. And then we tested the spring the next day on Tuesday, and note that we go into the little pocket area here. Always an important area, right? There's a little pocket in there, and we go right to the top of that bar. Not a surprise, or almost to the top of that bar, I think. and tested it, and then found no real supply down there and pushed on up. Wednesday pushed higher and got up above 48.08, but volume didn't expand. Thursday, I think the sellers saw that on Wednesday and said, oh, this is an opportunity for us. So they stepped in and pushed the market down in the morning session, I think, but buyers came back up in the afternoon and closed the day off the lows in the middle and back up above 48.08 and a quarter. And as I say, did so on pretty good volume. So Friday is an inside day on a little less volume, dipped down, but again, closed back up above 48.08. So this seems bullish to me. Each dip down after this spring sees price, sees supply is present, yes, but so far not strong enough to push the market down. Instead, every time it's dipped down, the market's bobbed right back up and closed reasonably good each day. So we may potentially go into a few days of absorption here, which is what this is starting to look like to me. It's maybe we'll see. The mind can play a lot of tricks on us and create patterns and what have you, and make up stuff out of those patterns. But this does look like it could go into some absorption here. We are at the old all-time highs, and so that wouldn't be a surprise. It's a logical place for absorption to take place if the market is interested in going higher. Let's take a quick look at the major markets, and then we'll circle back around to the daily and see what the coming week is likely to bring. So at the moment, all three markets are holding gains, and this is clearest in the Dow. The Nas reacted a little bit more strongly or a little bit more deeply than the other two markets, the Dow being the strongest of the two, and as usual, the S&Ps are in the middle between the two markets, because they include, the S&Ps include the major stocks in both of those indices. So the Dow does look like it's in the middle of absorption. It's, as we know, it's been the leader going into this end of the year rally, and now it's holding gains. So the Dow could come down and test or spring this low here, which was put in December 20th, or the lows could hold at the more or less current level and start to lift here, which would be more in tune with absorption. If we start to see the lows lifting in here, you can start thinking more likely we're seeing the absorption going on. A break below the 20th lows here, the Dow 20th lows, would turn the immediate picture bearish. We'd be coming down farther, at least in the immediate term. So let's take a look about what's going to happen this week. So for next week, we've got a key level here of 47.67 and a half. If the market is truly bullish, I expect that level to be good support if price goes down there. A break of that level would turn the market down, and price would likely head towards the gap area here around 4690, 4700. And that's a key level with, but I don't think if it starts heading down, there's enough cause in here to go lower. And I would expect the market to break this and come down to around and maybe even lower than this, the 4634 level. And now, if you recall, this is a key level of support going back to July 23 and March of 22. You can see this on the monthly chart, and I'll just refer you to that. But that's an important level of support. So if the market does start breaking this level here and breaks this, I would anticipate it coming back down to that level as a minimum. So now, while that may happen, I think is less likely, truthfully, given the overall bullish tone of the market. The 767 level should hold, and then we'd look for 4150, 4150, excuse me, to break, and then the market head higher. And again, we can go into absorption, and price can linger in this area between 48, 41, and whatever the lows are down in here. Friday's lows and Thursday's lows, or 47.67. It can linger in this area for a few days or even longer than that. We know that, absorption can go on for, I think we had 13 or 19 days back in the springtime of sideways action before we rallied and pushed off. So it can go for a few days. Anyway, assuming we overcome 4150, the 48, 4150 high, then we're going up into new high ground. So the 4900 handle up here would be an appropriate target. In, I guess, an ideal scenario, we would see the market push up to around 4900, then react back down here to the 48, 41 area as a backup to the edge of the creek, and then push up for higher prices. Now we'll see if that comes about. That's just a map that we, if things unfold that way, great, but it's not saying that they will unfold this way. So for this week, looking for 47.67 to hold, maybe some more days of absorption. And if that occurs, we're likely to see some narrow range days. And most importantly, we'll see those lows lifting. So watch for that if we're still getting narrow ranges in here. Then overcoming 48, 41, assuming we do that, and then a push towards 4900. We'll see if that all comes to pass or not. Obviously, the thing that would kill this would be an upthrust in here, so we have to, watch for that. But otherwise, I'm still thinking bullish in here. We'll see how it plays out. So there'll be no deep practice this week. I have to go have a medical procedure, nothing serious, but I've got to get it done on that day. So I'm going to be out for this week. So we won't do deep practice this week. We'll make it up. We have to figure that out, that date. Probably we'll do it. I'm not sure when we'll do it, but we will make that session up. So the next deep practice will be Thursday, the 25th at 8:00 p.m., our usual time. And also, not this Monday, but a week from Monday, and I'll remind us again next week, we have a membership monthly class on Monday, the 22nd, after the close. So I'll see you in deep practice. We've got to make up the last Thursday's session. I'll see you in deep practice on Sunday, and I will see you then. Take care then. Bye-bye.